What is bad credit? Today, we'll be covering a crucial topic that affects millions of people throughout the UK, bad credit. What is it? How does it impact your life? And a few helpful tips on how you can improve it. Let's break it all down. Hi there and welcome to the channel. If you're new here, don't forget to hit the subscribe button and stay updated with our latest tips on all things bad credit and bad credit mortgage related. But before we understand bad credit, let's start with the basics. What is credit? In simple terms, credit is your ability to borrow money or access goods and services now with the promise to pay later. Whether you're taking out a loan, applying for a credit card, or getting a mortgage, your credit history plays a role. So, how do you know if you have bad credit? You can check this by accessing your credit report, and in the UK, your credit report is issued by something known as a credit referencing agency. A credit referencing agency is a company that collects and maintains information on an individual's credit and financial behaviour. The three main credit referencing agencies in the UK are Experian, Equifax and TransUnion. These agencies compile credit reports that provide lenders, landlords and other service providers insights into a person's creditworthiness, whether they apply for loans, credit cards, mortgages, or even mobile phone contracts. And the information includes your credit history, outstanding debts, payment habits, and other financial data. And within these credit reports, you get given a credit score. Your credit score is a number representing your creditworthiness. The higher the score generally means the better the credit. If you have a low credit score, you may find it more difficult to borrow money. And in the credit score world, your credit score will differ dependent on which credit referencing agency is reporting the score. Now, lenders only have to report to 2 out of the 3 credit referencing agencies, and they each score in a slightly different way. First of all, we have Experian. As you can see, Experian scores between 0 and 999, with 0 being very poor and 999 being excellent. Second, we've got Equifax. As you can see with Equifax, they do score slightly differently, and you will be given a score of between 300 and 850, with 300 being poor and 850 being excellent. And finally, we have TransUnion. Again, you'll see the score slightly differently. You will be allocated a score of between 0 and 710, 0 being very poor, 710 being excellent. To make it easier than downloading 3 separate reports, there is a service out there called Check My File. And what this does is it combines all 3 credit referencing agencies into one credit report. I would highly recommend checking this out. There's a link to a free trial in the description below. Now that you know what it is, let's look at some of the reasons that can negatively impact your credit. Missed or late payments, not paying your bills on time, this is a huge factor. Even if you're just a few days late, this can be a big deal. High credit utilization. What do I mean by this? Well, if you have a credit card and the balance is close to its credit limit, this would be considered high credit utilization. If this applies to you, lenders can worry that you're relying too much on credit. Defaulting on loans. When you default on a loan, this means that you fail to pay it back, and it does stay on your credit report for up to 6 years. This will have a negative impact on your credit. County court judgments. If you have a county court judgment issued against you for unpaid financial commitments, this can have an extremely negative impact on your credit score. Individual voluntary arrangements, known as IVAs, or bankruptcies. This is seen as the last resort when you can't pay your debt. While they can offer a fresh start, they do severely damage your credit for years to come. And finally, errors on your credit report. Sometimes it's not even your fault, and errors or fraud on your report can harm your score if it's not caught early and corrected. Now, if you're thinking, oh no, my credit is bad and I'm doomed forever, don't worry, you're not. Bad credit doesn't have to be permanent. And even if you have bad credit, there may still be lenders out there who are prepared to lend to you, providing you approach the right people who know what they're doing. But if you do want to improve your credit, here are a few simple tips that can help make a difference to your credit right away. Check your credit report. The first step is that you need to know where you stand. As I previously mentioned, I would recommend using Check My File. Set up a direct debit on all of your accounts and pay your bills on the same day. It may sound obvious, but by setting up a direct debit, payments will come out automatically on the same day of each month, meaning you don't have to remember to do it. Reduce your credit card balances. Try and keep your credit card balances as far away from your credit limit as possible. This will lower your overall credit utilization level. Don't close your old credit card accounts. Even if you're not using an old credit card, by simply keeping it open, it can actually help you score by increasing the amount of available credit that you have. So, bad credit isn't the end of the world. The key takeaway is that with time and responsible financial habits, you can bounce back. So, make sure you check your credit regularly, pay your bills on time, and don't forget to ask for help if you need it. If you found this video helpful, give it a thumbs up and please share it with someone who might benefit from the information. And don't forget to subscribe for more tips on bad credit and all things bad credit mortgage related, and we'll see you in the next video.